Mode.
Good afternoon, everyone, and welcome to this James Cooper Creston Trustees Responsibilities Update webinar. My name is Mike Farwell. I'm head of our Charities and Education team, and I'm joined today by Andrew Smarden, who's a manager in our Charities and Education team. With a great turnout, a good mix of trustees and charity staff. There's three main areas that we'll be looking at. This is a 45-minute webinar, so it's very much a whistle-stop tour. Hopefully you can see the slides on your screen. So the three key areas are trustee roles and responsibilities, risk reserves and the kids company, very topical issue, and we'll cover sector issues. The trustee role and responsibilities is very much a recap, and I think potentially you might fall into two camps. One would be a trustee who's delighted to find all this information out for the first time, or second, perhaps a longer established trustee who can feel reasonably smug that you knew all this information already, although hopefully the reality will be somewhere in between the two. In terms of questions, there is an ability on your screens for you to submit questions which we will take at the end. So let's start with a background in terms of charities. The regulator in England and Wales is the Charity Commission. There's a separate regulator in Scotland, and remarkably there are now 165,000 registered charities, a statistic that often amazes people. There are over 1 million trustees of charities. Remarkably, the average age there is of a trustee is currently 57. Those of you that know me will know that I bring that average down, but only very, very slightly. And there are also 750,000 paid staff. In terms of income, last available statistics, £69 billion of income in the sector, investments worth £80 billion. So the description of the charity sector as the third sector, in addition to the public sector and the private sector, I think is a valid one. It is very significant. In terms of the mix of charities, there are only 1,700 charities with over £5 million of income, so there are lots of quite small charities out there as part of that 165,000. There's a variety of different legal structures that charities can use. One new structure that's come through in recent times is something you may have heard of, the charitable incorporated organisation. If you're a charitable company already, this is probably not going to be relevant for you, but those of you who have charities set up as a trust or as an association, a move to charitable incorporated organisation may well be worth considering. For those of you that are trustees, just some brief information. A slide here, some research carried out by the Charity Trustee Network. Some very positive figures about trustee experiences. You'll see a headline figure there, 90% of people enjoyed being a trustee. I think important training and induction. It's critical, I think, to this, and hopefully our webinar today will make a small contribution towards that. In terms of trustee skills, this is the traditional model where trustees have particular skills in certain areas, perhaps accountants and finance, lawyers and law, etc. I think the one on that list that people often struggle to attract people is the trustees with fundraising skills. So there's not a huge number of people out there available, so everyone's desperately chasing trustees with these particular skills. Another model in terms of trustee roles is the question of the different characters that you might have on a trustee board. I think you'll see an interesting list of descriptions there. Given a free choice, I'd like to think of myself as wise counsel and an inspiring leader. Others, of course, may have a different view. Always an interesting one to sit around a trustee table to work out which individuals fit into which categories. On that note, we're just going to launch a poll which should appear on your screens. Do you have an appropriate mix of skills and experience on your trustee board? So if you can vote now, the answers are yes, no and not sure. This is all, of course, completely confidential, but it'd be interesting to see what our audience feels about the mix on their board. So I'll give you a little while longer to review that as the answers come in. So quite interesting. I think we'll close there. Around about 40% said yes, 15% said no, and a very remarkably high percentages of not sure. It may be that you're all being incredibly diplomatic, or it may be that some of you, perhaps charity staff, are not necessarily close to the board. So, quite interesting that we've only got 40% saying a positive yes. Now, if we move on in a bit more detail, in terms of trustee responsibilities, the overriding requirement here is that charities need to give a public benefit. Some potential charities are refused registration at the Charity Commission because they can't clearly do this. This has been a long-running debate in this area in terms of public benefit. It must be a clear benefit and it must be available to the public, not restricted by geography or ability to pay. I think it's fair to say that in recent years, one of the key areas of debate has been around independent schools. There's a long-running confrontation between the Charity Commission and various schools bodies, including the Independent Schools Council. Essentially, the Charity Commission wasn't successful in this area, and it was agreed that it was up to individual charities to decide what the public benefit was. But in the context of independent schools, the Charity Commission has wandered back into that territory in recent times and given some indications of a requirement for independent schools to provide support to state schools. What I would encourage you to do is to read the Charity Commission guidance on public benefit to work out how it applies to your charity. In terms of available documentation, if there was one document I would encourage trustees to read, it would be the Charity Commission guidance, the Essential Trustee. It was updated very recently to make it easier to read. Easy to read at a glance. You can dip in and out. Some charities issue this to their trustees when they're appointed, and I would certainly recommend that if you don't do that, that you consider it. There's a wide variety of topics covered there. You'll see the first one, not surprisingly, is the question of public benefit, and the second, again perhaps not surprisingly, is the requirement to comply with your charity's governing document and the relevant law. So in terms of the charity's governing document, if you're a trust, for example, it might be a trust deed, and if you're a company, it would be the memorandum and articles. So have a read at that document. In terms of compliance, there is a lot, as we'll see over the next few minutes, there is a lot to cover. There's charity law, the Charities Act, etc. There's reporting to the Charity Commission. One of the most notable there is serious incident reporting, where you're required to report serious incidents to the Charity Commission in real time as they happen. Not many charities have been doing this, so I would encourage you to review that information to make sure you do report that properly. Our experience is that charities that do report these issues and are taking appropriate action is that the Charity Commission just notes that and takes no further action. Complying with your charitable purpose and objects is important. It goes without saying perhaps that you need to act with integrity and avoid any personal conflicts with the charity, and make sure that you look after charity funds. In terms of some specific areas where you need to consider your responsibilities, there are some specific guidance and rules in terms of investments, so you will need to work out what your investment policy is and what powers you have. In terms of property, there are some very specific legal requirements in the Charities Act about what you can and can't do. If you're a charity fortunate enough to have investments either in the terms of shares or in property, there'll be a question of working out what the appropriate mix is between the two. Tax is an interesting area for charities. Some people believe that charities don't have to consider tax, but this isn't true. There are some key areas to consider, one of which would be the question of trading, whether your charity moves into trading, the trading arena, which might generate some potential tax liabilities. Typically the way of getting around anything other than minimal trading is to set up a separate subsidiary. There are of course many tax reliefs available to charities. Two of the largest ones are gift aid and business rates relief, but there's a whole variety of other relief such as stamp duty. Of course the sector's big bugbear is the requirement to pay VAT. VAT and charities is a very complex area, so I certainly recommend considering taking appropriate professional advice there. Particular rules in terms of anyone connected with the charity and other charities, so making sure that transactions there are legal and properly approved, and the overall duty of care trustees need to act with reasonable care and skill. It's worth mentioning there, for anyone on a trustee board with specific skills, so for example an accountant, they would be expected to demonstrate greater care and skill on financial matters than perhaps someone who had no skills in that particular arena. So trustees need to make sure that charities' funds are used for appropriate purposes. They need to make sure that they avoid any actions creating undue risk. Andrew will cover risk later. This doesn't mean that charities can take no risk, but they need to consider risk in anything that they do. Particular care needs to be taken with borrowing or investing. Again, the theme of external professional advice crops up. Trustees can, of course, delegate some of these things to management. I think a written scheme of delegation clarifying what the trustees can do and what the trustees are expecting of management can be very useful to avoid any issues. But ultimately, of course, the trustees do retain responsibilities themselves. Some people ask, can trustees be paid? The answer, other than exceptional circumstances, is essentially no. This was considered in the recent Charities Bill, created a great deal of debate, but that's the current position is generally no. And of course, in terms of other responsibilities, if anything is going wrong, the Charity Commission will periodically investigate charities if anything comes to their attention they believe needs to be looked at. So you may be sitting there thinking, gosh, this all sounds terribly scary, lots of things to comply with. But there are things, of course, that you can do to mitigate your liability. Take care with major contracts. Identifying risks is a key one, so making sure that you keep a risk register. Andrew will cover risks in a few moments. Making sure that there's a proper induction process and training. Again, the regular theme, professional advice, is a great help in mitigating your own liability. We've mentioned delegated authority. Making sure that you understand the key legislation relevant to your charity. There's a whole myriad, obviously, of regulation that might apply. So an example in a charity that deals with children, making sure that you're aware of the appropriate child protection rules. And finally, insurance. Trustee indemnity insurance can be taken out to help protect trustees, although of course that's unlikely to be that helpful if there was negligence or willful actions detrimental to the charity. In terms of other useful Charity Commission guidance, they document the hallmarks of a charity, of an effective charity. Is a very useful document. You can use that as effectively as a self-assessment tool for your own charity to work out whether you're actually doing all the things that are seen as hallmarks of an effective charity. Some of these, we've talked about board requirements already. Andrew again will cover off financial matters. Working out the activities to provide public benefit. So future sustainability is also a key theme in the changing world in which we now live. You'll see a requirement to review structure, policies and procedures. So I think the days when you could do something, review a policy, and then review it in 10 years' time are over. These things all need to be reviewed regularly. And of course, considering your impact on the environment in these times is also important. So a very useful self-assessment document. Hopefully you can read the words on the next slide. This is from the Charity Commission publication, 15 questions trustees should ask. Some of these are very interesting. Some of them are cropping up as a regular theme during this webinar. So if you want to liven up your next trustee meeting, I would encourage you to raise some of these items at the appropriate time. I think it's obvious that some of the questions to do with finances are very critical. Pension schemes topical at the moment. So do make sure that these are questions that your trustee board and of course the management of the charity are considering. So that's very much a whistle-stop tour of some of the key responsibilities for charity trustees. I'll now hand over to Andrew, who's going to talk about risk reserves and the kids company.
Good afternoon. It's great to have such a large audience for this webinar. As Mike was saying, the collapse of the kids company is something the theme for this webinar. It has prompted the Charity Commission, given some of the public scrutiny of their role in the kids company problems, to actually reissue some of their pieces of guidance which are particularly relevant. One which has not been reissued, but it is still immensely valuable for trustees, is the Risk Management Guidance CC26. It's received very strong emphasis in recent years. I think it is something that trustees should always keep in the forefront of their mind in terms of understanding your strategy for your charity and thinking what the key threats and possibly opportunities for you are. We've set out the key risk areas there to think about your charity in the round, as it were. And a good way of tracking these is actually to maintain a risk register, to update it at least annually. It's useful sometimes as well, if you do so, to actually do it on a basis which assesses levels of risk as well, from low, medium and high. You could do that through a traffic light system. My own charity uses a weighted average score. Another point with risk management is that the revised guidance in the new SORP 2015 Statement of Recommended Practice for Accounting for Charities actually asks trustees to go into a bit more detail about how they manage risk within their charity. So you won't simply be expected to put in a boilerplate statement. You need to say what your significant risks are and how you guard against them. Obviously, one of the key ways in which you control risk within your charity is to have a robust system of financial and other operational controls. Obviously, much of this will be delegated to the charity's staff, but ultimately primary responsibility will always remain with the trustees. So it's important that you understand the systems your charity has, that you maybe have good solid written financial procedures and other procedures manuals in place. Crucially as well, and this is something which will depend upon the size of your charity, it's important to have a good system of segregation of duties, proper authorisation controls within the charity. That may be more or less difficult depending upon your size, but it's something that we as auditors or independent examiners are always very happy to advise upon. It's also important as trustees, even if you're not a financial trustee, to understand how the charity's sort of profile of income and expenditure works, what assets you hold, buildings, cash balances and so on. I think one of the most fundamental areas, and one that trustees should make sure they really have understood, is the expenditure controls within your charities. So what systems you have in place for purchase ordering and procurement, what systems you have in place for approval of payments and so on. Obviously those accounting systems and controls will feed into your regular management accounts, and I think actually having a robust, reliable and sufficiently detailed set of management accounts is really one of the key recommendations that will come out of this webinar, and is certainly one of the fundamental things you need as trustees to make sure you're properly informed about the charity's current situation and status, and also to make sure that you can take good decisions in terms of carrying out your charitable objectives and growing the charity and fulfilling your strategies. The question is always whether you have a solid set of underlying accounting records. Are you using the right kind of package? Do your staff know how to use it? Are you keeping budgets up to date? Are you making sure that you have an annual budget and that you keep analysing it throughout the year, maybe on a quarterly basis with your management accounts, monthly if you're a larger charity? Are you as trustees, particularly non-financial trustees, getting adequate explanation from the management team as to the risks and sensitivities they've incorporated into those management accounts? Are they giving you enough detail on the variances during the year on expenditure, for example? Maybe they're even going into too much detail. The charity I'm a trustee of, Outside Work, recently introduced a detailed set of management accounts for trustees who are interested, in some bar charts for the trustees who want a more quick and easy picture of how the charity is doing. Those management accounts obviously need to feed into your annual statutory accounts as well. If you find through your audit or independent examination there's a lot of adjustments being made to get to the right year-end position, does that indicate you have some challenges within your charity, that maybe your staff need some more training? There are some, we won't touch on them in too much detail today, but there are some changes with the overarching accounting framework. The Statement of Recommended Practice has changed in 2015, and we do have 2 webinars on the James Cooper Preston website which might be useful to you about those changes. Obviously audit is a fundamental part of good governance, but also I think making sure that all trustees on the board take ownership of those accounts, understand what's in them, they've understood the profile of funds, they've understood why there is a surplus or deficit for the year, and that the trustees are also able to get behind the trustees' report for that year. It's very easy to see the annual accounts as being a kind of boring piece of boring compliance document you have to submit to the Charity Commission, but it can actually be a really excellent way of getting across the real impact your charity has on the community, and showing that you as trustees are fulfilling your responsibilities. As we mentioned, the Charity Commission has reissued 2 particular sets of guidance in the wake of the kids company collapse. That's CC19 on charity reserves and CC12 on managing finances, particularly in cases of difficulty. So charity's reserves, as many of you will be aware, are the unrestricted funds of the charity which are freely available to spend on any of your charitable purposes. So you as trustees have complete discretion as to what you do with that money. Obviously it's not those funds which are tied up in buildings, for example, but cash balances on hand that can be used as you see fit. Interestingly, during one of the parliamentary committees, William Shawcross, the chair of the Charity Commission, actually made a very clear public statement that reserves policy is a very difficult area for charities. He said Kids Company wasn't alone in having a low level of reserves, and that actually charities have there's a tension in terms of the Charity Commission's requirements it imposes on charities. He said on the one hand we advise that charities should spend their money, and at the same time they must have adequate reserves, so it's quite a hard act for them to follow. I think that's a very useful comment because there is no right level of reserves. It will depend on you as a charity, what your future plans are, what your current needs are, and the size of the beneficiary group you're trying to service, etc. CC19 actually has a pair of annexes which contain some very useful guidance on how you as a charity and the Board of Trustees can actually assess the right level of reserves for you. Maybe say 6 months of spending on a particular set of charitable activities should be held. And also just guiding you in terms of what should be excluded and excluded, how you look at your level of operating costs and so on. A really important thing going forward again is that with these new charity accounting rules, the new SORP, you will be expected to explain your reserves policy in a bit more detail and justify it more effectively in the coming year. The other piece of guidance which the Charity Commission have reissued recently is CC12, managing a charity's finances, planning, managing difficulties and insolvency. Now, insolvency is a fairly dread word, I think, for many trustees, and I have seen cases where trustees do have faced difficulties, actually had to wind up a charity. It's not an easy decision, but it's one that it's better to take in an informed and proactive manner. And again, really effective management accounts enabling you to identify particular risks, things which might threaten your going concern status, your ability to continue operations. It's better to identify it early and plan for what the Charity Commission encourage you to do, which is to have an orderly wind-up of the charity. Again, looking at your reserves policy, do you have adequate cash in hand to pay any redundancies for staff, to cover any other liabilities such as obligations to a landlord? And I think most importantly of all, do you have a plan for the operational handover of the charity? Could you pass your beneficiaries on to another charity, as we indeed have seen some charities do? Would you be able to, or would they actually be left out in the cold in the way that the beneficiaries of Kids Company were? It's sometimes difficult as a non-financial trustee to pluck up the courage to ask questions during a board meeting. So in the next couple of slides, we've set out some questions that you can ask about the finances, and which I think is probably quite a useful kind of piece of reference just to sort of go through and give yourself a rounded view of what you should be thinking about. Particularly at the moment when there's a lot of competition for relatively limited charitable funds, thinking about your sources of income, whether you can diversify them is very important. Thinking about what contributes to your surplus or deficit for the year, and also, again, a problem that Kids Company faced, whether your cash flow is adequate, whether you've understood the matching of income and expenditure throughout the year, is very useful for trustees to do. There's another slide of questions there. I think one we just pick up on is the final one, that have we as trustees considered what-if scenarios, and do you have a disaster recovery plan in place? It might sound slightly excessive, but actually it is something which is a mark of a good board, that you've thought about every eventuality, that you have a kind of updated strategy or business plan, and you've thought about the worst. So we thought it would be helpful just to pull some specific issues out of the parliamentary reports and National Audit Office reports on the Kids Company collapse. Hopefully these are not issues which would affect your boards with quite the severity or extremity that Kids Company faced, but we still feel there's useful broader themes. Founder syndrome, for example, is very common to a number of charities. You have a dynamic or charismatic founder who maybe the trustees need to have some robust or diplomatic sort of conversations with to enable the charity to move on from its original strong vision, which may not be quite as suitable to current circumstances. Going back to CC19, the reserves guidance, Kids Company led a very hand-to-mouth existence. It operated with project-focused grants, which lasted for a limited period of time and were basically didn't give them the opportunity to build up any kind of surplus at the end. A poor audit trail. We mentioned the importance of a good system of controls. It was something that Kids Company was very lacking in. But again, as auditors, we're always happy to sort of comment and make recommendations as to your systems. One of the most shocking things about the Kids Company collapse was some of the stories which have come out since about the way in which they managed donor relations, which was quite poor. And again, the Trustees report is a good way of communicating, making sure that your fundraising team are on message and realistic about what the charity can achieve for people's money. And the fundamental principle that actually it should always be easier for a charity to estimate its expenditure than forecast its income. You should, with your management accounts, have a good system of control and review of variances, and also some degree to plan to kind of manage the costs, maybe reduce them if circumstances change or there are unforeseen demands upon the charity. So just to pick up on some possible recommendations coming out of Kids Company, it's always very important, I think, and Mike mentioned before, to actually make sure you formalise to some extent the relationship between the executive and non-executive members of the team, that there's a scheme of delegation in place. Good internal reporting, we've emphasised the need for management accounts, and again, if any of you as clients would like us to look at your management accounts and maybe make some comments upon them, we'd be delighted to do so. You should always keep your systems and controls under review. As I said, it's useful to have a kind of annual review of things like finance procedures manuals and the risk register. The Charity Commission themselves will actually ask you as trustees now to confirm that you've reviewed your financial systems during the year. So as trustees, you should be able to say you've done that with your hand on your heart. Also, working with your auditors. As trustees, you should be encouraging the auditors not just to give you the answer you want. You should be asking for support which is robust and offers good recommendations. And once again, keeping that reserves policy under review and planning for contingencies is very important. Going back to our earlier quiz question, making sure that your board has the right mix of skills is very useful. And actually having an annual skills audit of your trustees is something that my charity does and has been very useful in terms of us broadening our board of trustees and making sure we've got the right skills to take our charity forward. So, in addition to that, Kids Company will produce some changes as well in terms of how the Charity Commission operates. Most obviously now they've reissued some of their guidance and augmented various bits of it. They're likely to intervene more readily. I mean, we do see an increased number of investigations, although the Charity Commission had its funding cut quite severely and been less able to intervene in recent years. They are trying to change that. They are also likely to get new powers to disqualify trustees who haven't fulfilled their responsibilities. And more generally, there may be some consideration of maybe them beginning to move to fee charging like companies have, so they actually have more funds to carry out investigations and so on. So I'll just now hand you back to Mike, who'll take you through some of the more new issues within the sector.
Thanks very much, Andrew. So we're on good track to finish within our 45 minutes allotted slot. I'm sure you'll be delighted to know. So we'll just take a few minutes at the end before we come on to questions, just to cover some of the other developments that we're seeing in the sector. Of course, these could form the basis of probably a whole week training session, but we're just going to cover them off in a few minutes. The first one Angie's mentioned a couple of times is the new accounting rules for charities. So we're working with clients at the moment on this. The accounts are looking slightly different, some changes in format, some changes in disclosures. But I think we're seeing that for the vast majority of charities, these new rules are essentially a matter of evolution rather than revolution. So they're not having the dramatic change on accounts that perhaps the previous SORP, the 2005 one, had. So perhaps not something to worry about majorly. Andrew mentioned strategy earlier. I think we're certainly seeing many charities reviewing their strategy at the moment. The days when you could prepare a strategy and it would last for 5 years and probably over. And I think we're seeing charities reviewing their strategy on a very regular basis as the world changes significantly, and particularly around the funding arena. Related to that, lots of charities are also doing scenario planning. So typically this would involve what would happen to our charity if a particular income stream stopped. Often that involves the potential loss of some public sector funding. So this is actually a very useful exercise to do. I've been involved in a number of charities that have done this to actually work out what they would do if the Armageddon scenario happened. We all know that technology is changing dramatically and rapidly. Lots of charities are looking at that at the moment and the impact on them. Mergers and collaborations is a big theme. I think it's fair to say that when the financial crisis first struck in 2008, there was an expectation that there would be a huge number of mergers of charities, but the number of charities at between 160 and 170,000 have stayed remarkably similar. What we have seen, however, is a dramatic increase in the amount of collaborations between charities and perhaps between charities and public sector organisations to improve their impact for beneficiaries. So if you're a charity that works very much in isolation at the moment, I'd encourage you to think about whether the impact on your beneficiaries could be enhanced by working with others. Other relevant issues, pensions are always a topical matter, and in the light of new rules coming in over the next year or two, that's worth looking at. The national living wage, of course, will have a big impact on many charities. So the plan here is for the national living wage to increase to £9 an hour by 2020. And for charities which perhaps have quite a number of low-paid staff, so perhaps, for example, in the care sector, this will have a big impact. And of course, it's not simply a question of looking at the people who are perhaps under that amount at the moment, because there is invariably a knock-on impact in terms of differentials, perhaps those people who are earning slightly more than that. So lots of charities at the moment are working out what the impact will be for them over the coming years. Gift aid changes. Gift aid seems to be in a permanent state of review. Hopefully we'll get some finality on that in the not too distant future, but that is a huge tax benefit, of course, for many charities. The new Charities Bill winds its way through government quite slowly. I think we're getting near the end now. In terms of some of the key issues for charities there will be a bit more time for, a bit more powers given to the Commission to intervene in charities, and there's also some moves in connection with fundraising. I think the next 2 points, public confidence and fundraising, are very relevant ones. I think it's fair to say that after the kids company and some other issues in recent times, the public confidence of charities has taken a bit of a knock. Part of that, of course, relates to fundraising techniques. I think in terms of last available evidence, the largest 150 charities generated approximately £10 billion of money from fundraising activities on an annual basis, out of that total of the approximately 60 billion that we looked at earlier. So there are some very big numbers here. There will be a new fundraising regulator, a single code of practice, and there is also talk about fundraising a preference service where individuals can opt out of receiving information from charities. Lots of charities are quite worried about this latter point, as they fear that it will cut off lots of potential revenue streams. So if you're a charity that's heavily into fundraising, you need to be aware of these changes and make sure that, as well as complying with them, that your stakeholders in terms of donors and others do retain confidence in what you do. Finally, the Charity Commission only last week issued some guidance on commercial partnerships, encouraging the charities to review any commercial partnerships that they had. Of course, this was largely in response to concerns about the Age UK energy deals that were being offered and some concerns there. That was a factor which has led to a recent drop in public confidence in charities. So if you do have any commercial partnerships like that one, it would be a good time to be reviewing them. The eagle-eyed amongst you will note that we managed to get through these 2 slides on charity sector developments without making any reference to the EU referendum in June. I haven't seen much comment so far on what the impact will be for charities, but no doubt in the not too distant future we will see some commentators indicating whether this may be good or bad for the charity sector. So that brings the formal session to an end. It'd be a good time, I think, to take questions. One of the questions that has come up has been the question of the slides. We will email the slides to everyone after the webinar, and those of you that are desperate to listen to the webinar again, it will be available on our website. So some of the questions that have arisen, someone has asked, what view do funders in terms of take on the level of reserves that charities have? Andrew, I don't know if you've got any comments on that one.
I think again, to some extent, there is no correct answer on this. It's how you explain it in your trustees report. One thing we have seen in recent years, again with this emphasis on resilience, that many funders actually are looking for charities actually to show that they have some financial stability and they actually are, a good home for their money. They're not going to sort of need to wind up or use a donation just to sort of plug an existing hole.
Okay, thank you, Andrew. Someone has asked the question of, let me just read it, the impact of collateral damage in terms of the kids company, and Olive Cook, who of course was the elderly lady, I think, who committed suicide partly as a result of fundraising requests, reference to that making causing issues in terms of the public confidence in charities. And the question against that context is what can charities do to mitigate risk outside their control? I think it's difficult with anything that's outside your control to mitigate the risk. I think the reality is in some of these situations, some of these factors, there may be some control. Andrew, do you have any thoughts on that?
I think again, using your trustees report to put forward a good picture of your charity with well-supported impact reporting. I think possibly also within particularly if you're a local charity, it is perhaps easier than some of the national charities to build a community of local supporters, volunteers, donors, local businesses and other organisations who understand what you do and don't tar you with the brush of some of the larger ones, AGK and others who have been affected by some of the really sort of dramatic news stories recently.
Thank you, Andrew. Someone has asked, please can you say if there is a Charity Commission guidance on changes to fundraising processes? I think we're still in the interim period at the moment in terms of fundraising. The fundraising regulator has been set up. I think there's been a recent appointment of a chair and chief executive. There is a working group at the moment working on the recommendations for the fundraising preference service, and there is discussion about merger negotiations between the Institute of Fundraisers and the Professional Fundraisers Association. I think the key thing there may well be the question of the code of practice. The new regime is due to be enforced by the summer. Previous dates around these topics or anything to go by, that may well be the autumn, hopefully autumn this year. And no doubt in due course the Charity Commission is likely to issue some guidance on this, although it may be that that guidance will simply be referring to other guidance issued through these various organisations. So I think we're very much on a wait and see in terms of Charity Commission guidance on that particular topic.
So also there is very good existing guidance from the Institute of Fundraising, which I think regardless of recent news stories, charities would find value in using. I think there were also some comments in William Shawcross's recent speech, which might well be on the Charity Commission website if you look there on these things.
I think I think this is the final question we have. How do we find new trustees? But I think the typical approach that charities mainly use for recruiting new trustees is through personal contacts. This may or may not get you the people that you ideally need. You may end up with very similar trustees to the ones you've already got. We have seen quite a few charities who have issued adverts in local and national newspapers. That can often be quite a successful way of recruiting new trustees. Approaching companies, companies increasingly these days are very aware of corporate social responsibilities and may well provide individuals to fulfil those roles. And there are, of course, lots of other networks around, volunteer networks, networks that link businesses and charities, etc. So I think hopefully using some of those approaches will enable you to find the trustees that you need. I think it's important that trustee boards are refreshed on a regular basis, and that new trustees are brought in quite regularly to bring new ideas and approach as to how you deal with things. So that was the final question. So as I said, the slides will be emailed to you. If there's any further questions that you have on the presentation, the contact details from Andrew and myself are on the slides. So finally, thank you very much for joining us, and enjoy the rest of your day. Thank you.